Hello, Scott. Hello, Steve. What's happening over there?
I'm ready to entertain.
Yeah, exactly. And man, what an interesting day it was. Of course, it is the holiday week. We got Thanksgiving coming up. It's kind of like they tried to cram all the action into today. But we still got Tuesday left over, and I do believe Wednesday is a half day. Is that right? Or is it Friday? I
No,
keep
Friday's
forgetting.
the half day.
Okay, so Wednesday's a full day, and then Friday's the half day. All righty. Okay, well, welcome everybody to what will be the last office hours of November. I'll be your host today. Got Steve in here with me. So before we get cranking here, just a quick word about the disclaimer. Just want to make sure everyone in attendance is aware of the fact that all the information that we share with you in this webinar or any of the other webinars we have coming at you on a weekly basis is for educational purposes only. Translated to, we're not here to dispense buy and sell information or recommendations. If you do need someone that can give you buy and sell recommendations, please seek out someone that is licensed to do so, like a registered investment advisor or a Series 7 licensed stockbroker. Bottom line, somebody that's licensed to dispense that type of info to you. And once again, all the info that we share with you guys in these webinars is for educational purposes only. I think that'll get it covered pretty good there. And in addition to the award-winning tech that is TI, always like to take a little bit of time at the top of the hour here to let everybody know, especially the new people, about the community that we've built around trade ideas. And right here, the trading room hosted by Barry Anderson, which was certainly chocked with good information this morning. Um, Barry opens the doors to the trading room 30 minutes before every open. Large crowd in there each and every day. Barry does a fantastic job at moderating and sharing his trading techniques as well as the way that he uses the software with everybody. And once the first couple of hours die down, he doesn't mind answering questions either. So it's a great resource. And the second best thing about it, other than Barry, is that it is free. You don't even have to be a subscriber to get in there and check out the trading room. So get in there, utilize that because it's certainly a benefit. Of course, every other Monday, you're going to get myself and Steve for office hours. Every other Tuesday, it's going to be Steve and Andy. Every other Wednesday now, it's going to be the same old Dan, our CEO and founder, along with Brad Williams on every other Wednesday. Every other Thursday now, Andy's Trading Studio. I'm going to ride shotgun with him. And of course, every weekday, the daily support session from 12 p.m. to 1 p.m. Eastern, which is staffed by a different trader/trainer personality here at Trade Ideas, Monday through Friday. Next slide will show you how to get there. Cool part about it is once you get there, you just bookmark this URL, trade-ideas.com/live. Then you can bookmark it for easy access. It's the same bat time, same bat channel every day, hosted on our YouTube channel. In addition to all of our other library of resources here, this is a great series, especially if you're brand new to the product. The TI University series, of course, if you're a new person, 101 and 201 are very helpful, showcasing all the basic functionality of Trade Ideas Pro, and will certainly help you get over the learning curve a lot quicker by watching these first two. And of course, once your appetite permits it, you can cruise on to the more advanced stuff in 301 and 401. These are all hosted also on our YouTube channel, so you can stop and start them at your leisure. And just go back and rewatch until you get everything down. So once again, TI University 101 through 401, all hosted on the Trade Ideas YouTube channel. All right, got a lot of cool stuff to go over with you guys today. As I made the comment earlier, it's kind of like they tried to cram all the action of the week into Monday. So there were certainly lots of good plays out there, both to the short and the long side. Kind of had an interesting range in the SPY today, Steve. So if you're ready to take it and we can take a look at some of that stuff, I will gladly kick the can over to you.
Yeah, I'm ready. You got a lot to talk about over there. I won't take too long.
No worries.
All right, very interesting close. I think we all saw that giant dive down in the last 30 minutes of the day after a nice gap up and a spike, which gives us actually two warning signal candles here. All right, the first warning signal is that reversal wick. The second warning signal is the fact that the body of this candle engulfed the body of Friday's candle. So we have an engulfing candle and a topping tail. And I might even just throw one more in there. Things that concern me was this, okay? We had kind of a slight newer high, but we have a definitively lower low in the RSI. So the high today was done with much less oomph. That nasty close on lows with a volatile candle brought the RSI way down. This is what we call a negative bearish divergence. I'm not long right now. I don't want to be long right now. I want to see how this works out. I mentioned last week in my webinar that things were getting a little dicey and the market could use a good correction. That one back here was not quite really the correction I was hoping for, but maybe this action today here on the engulfing candle and the top wick, that reversal wick, could very well be a sign of a reversal candle. We could look back on this day and say, oh, okay, well, that was interesting. Let's go over to the NASDAQ and the Qs. Even more of an egregious engulfing candle. This candle engulfed all of Friday's candle in the body. Very bearish. Also throwing up a little bit of a wick there, not as much as the S&P, but the action today is nothing but constructive, especially on the heels of a couple of weeks just grinding higher on low volume Fed liquidity. And if I'm not mistaken, I think this little hiccup here in the market was a little mini tantrum about, I think they're renewing Jay Powell as governor. I think the market might have wanted Brainerd, another guy, but we got what we got. But the action is telling me be very careful. I would not be surprised to see some nasty downside follow through tomorrow. And where we go from there is anybody's guess. But you know, a healthy pullback to the 20 SMA and the NASDAQ is certainly warranted in my book. You know, you just got to work off all this green froth that we had going. And that might have been the catalyst today at the close, some news on the new Fed chair renewal. But that's all I've really got in terms of market recap. I mean, I often look at the IWM, the Russell 2000, but I'm going to guess that that is just not doing as well. I was kind of interested back here as it was holding the moving average, but the last 5 days have kind of shown the true color in the small cap land of the Russell 2000. So watch your longs, be careful. Tomorrow we could be in for a little bit of volatility. And that's all I got.
Yeah, thank you very much, Steve. I was just checking out the questions here. List of index tickers. Okay. Yeah, so as Steve was saying, let me get the screen back here. It looks like I have a lot to cover here, but it'll probably go pretty quickly here. We might even finish a little bit early today, but we'll see how it goes. First and foremost, what did my big cap compare count window end up reading today after the first 15 minutes? Well, you can see right here, 53% bearish, okay, which typically when I see a bias less than 55%, either the long side or to the short side, it just kind of tells me, well, anything is possible. And of course, when we look at the action today from the SPY, of course, this is pre-market. So I tell you what, let me just get rid of pre-market for now. You know, looking at the SPY, a little bit of upside off the open and then a little bit of downside towards the close. So certainly a little bit uncharacteristic intraday pattern there on the SPY for sure, but certainly anything did go according to these compare count readings. For those of you who are new and might be wondering, well, what in the world is this thing that I'm looking at here? This is a compare count window. I typically take a peek at it 15 minutes after the open, and it gives me an idea of the buying and selling on the bigger cap stocks, and bigger cap meaning simply a market cap above $4 billion. So this thing is looking at stocks hitting highs, stocks hitting lows in the first 15 minutes with a market cap of 4 billion. And a lot of the times it gives us a pretty good indication of what the market might do. Of course, I don't really start paying any credence to these readings unless we get a bias of 55% or greater, one way or the other. That's why I'm saying anytime it comes in below that, well, probably gonna have a little bit of everything in there. Stocks going up, stocks going down, so forth and so on. And that was certainly the case today. So get back over here to the itinerary. Holley recap. Holley was certainly active today. So let's take a peek here and just do the Holley recap real quick here. Very active, and we can see all of the signals that were generated today. Nice little smattering of longs and shorts in there as well. Now, before we get going here, just want to make sure everybody understands the numbers that they're seeing in the columns here. And of course, over here in the conservative, moderate, and aggressive columns, we see a value of 110 in conservative, 193 in moderate, and only 31 bucks in aggressive profit. These are all based, the figures that you're seeing here in the conservative and the moderate profit are based around risking $100 per trade, okay? And the system is gonna get me into the proper share amount that you can see here based on the respective stop loss for each and every trade. So when we're looking at the Holley recap or doing the Holley recap, typically 3 topics I typically like to cover. Let me just pull this back over here instead of me just saying it. Was there any conservative versus moderate spread that we perhaps could have taken advantage of during the market hours? There was a little bit today. You know, a lot of the times we'll see some spreads that are 50%, 100% or more. We did have some spread today in that area, but it's a lot less, just kind of minuscule compared to what has been in the past. We'll cover those. LVS, keys, and THRY all had a little bit of spread between conservative and moderate. Any trade arounds to take a look at, which are typically trades that stopped out, but then turned and went the right direction. Didn't really have any of those today, but I'll show you the ones that were not candidates, just so you'll know what they don't look like. And then any potential add-ons, any nice chart setups after the AI signal. And not really, but we had maybe one in the PBW, pre-market low. PBW was a short today. So let's go ahead and take a look at the conservative and moderate spread here. Now we're going to be focusing on these 2 columns right here for you people that might be new, conservative and moderate. And typically what we're looking for here is at the end of the day, we'll see a larger number in the moderate profit column, bigger than the conservative. Well, we can see right here in the USIO, smaller number, a little bit of spread in the PBW, which was the short. We'll take a look at that one in just a moment. So what I focused on today are the ones with the more noticeable spreads, one of which was LVS. Now, when I say there's not a lot of spread, conservative, 1782, based around $100 risk on conservative mode, and 60 bucks in moderate mode, which is still not a lot of cash there, but still is 3 times more than what the system made in conservative mode, or what the AI made, I should say. So here is the LVS chart, intraday 5-minute candles. We can see right here where the AI called the buy signal. Nice big wick up and then comes right back down, marches up. Why did the AI exit the trade? Well, we can see right here in the exit column. And by the way, the exit reason is always going to list the conservative exit reason. So when we look at LVS, it was a profit save, okay? 5 reasons why the AI will exit in conservative mode: stop loss, profit target hit, or timed hold expires. And then the 2 audibles that the AI can call in the form of profit save or reduce risk, getting out of a loser or a winner early. And that's exactly what happened with the LVS. Maybe just this little up and down action triggered it, but we can see right here, the shaded area is the time spent in the trade, along with 8:36 on the entry time, 8:52. So just about 16 minutes in that trade. We can also see the entry price here, $39.90, and the whopping exit price, making about 20 cents on that trade. Okay, so how would we attempt to extract some of this spread here? Well, all we have to do is simply ignore the AI's conservative exit and say, you know what, this thing's hovering above the entry price. We're in the money. Never really acted like it was going to come down here and stop us out at all. Matter of fact, never really went under the entry line, which is a good thing. So all we have to do is be a little patient. And had we done that with the LVS, would have made approximately 3 times the amount that conservative booked. So a little bit of spread, but spread nonetheless. Okay, the next one was keys. Once again, not the longest hold time. If we look at the entry time of 11:04 over here, exit time of 11:32, just slightly less than 30 minutes spent in the trade total. But this was a short. Okay, so not a bad entry coming right here at the 193.64. A little bit larger of a price target than we're typically used to seeing, but setup is a setup. This trade kind of sums up the way the market was today, whether you were trading short or whether you're trading long. We get the nice entry here, 193.64. We get some immediate action to the downside, only to be followed by a retracement all the way back up through the entry line. Okay, didn't quite make it to the stop level, about halfway through the stop and the entry price, and then just a nice long consolidation, having to wait until the very end of the day before this one coughed it up. So once again, spread between conservative and moderate, but definitely not an easy one to sit through, okay? Especially when we see it come back up through being profitable, come back up through the signal and having to sit a little bit of a wiggle there. Not a lot of fun, but as I said earlier, kind of a testament to the day. We had a lot of things doing this to the long and the short side. Of course, we did have some nice follow through on some plays, and we'll get to that towards the end of the presentation here. But yeah, you would have had to, not the most easy moderate versus conservative spread to capture there on the keys, but spread nonetheless. One more to take a look at here. That would have been the THRY. Another long, and wow, what a crazy looking chart. But notice, even though we do have a smaller total in conservative, we got a little bit more juice, about 80 bucks more based on $100 risk on moderate. Sure looks like conservative was the one that would have kept you the most sane today. THRY getting that entry at 36.59 right here. We get some nice action. And right back down, and the AI pulls the plug. We could call it a flat, losing $1.98 on $100 risk, not too shabby. Of course, it ended the day higher, but we would have had to suffer all the way through this pullback and almost a stop out, not too far away from the stop there. So even though we are showing some spread here, those of you who attend on the regulars back when the market was a little less volatile, you probably remember they were just nice and smooth and they would keep trucking along. They wouldn't throw these big elbows like what we're seeing here in the THRY. So even though there is spread at the end of the day, that doesn't mean it was easy to sit in these things and suffer these wiggles here. So even though it's there, looks can be deceiving. The chart tells the story there. So conservative, like I said, was keeping the old brain a lot saner if you're closely following the AI today. Now, typically, when we do have more conducive charts, it is easier also to find these areas in these AI trades where you can tack on a little bit more size and really maximize the trade. Not really any of that in these charts today. The only one that presented maybe a little bit was this PBW short, and it wasn't really off of anything here for example, it wasn't a range break here because the AI signal came after the range break. But if I do activate my pre-market, we had an interesting little spot back here. One big candle in the pre-market. We had the AI giving the signal here, right there at 91.04. And then shortly after, we did break the pre-market low. And we can see what happened there. Nice trade nonetheless, but about the only one I found that you could have tacked on any shares because all the other charts were stretched out and no nice consolidation in anything, which is usually very obvious. Only one today that would have been a decent add-on was the pre-market low breach of PBW shortly after the original AI signal. And of course, that was a target hit, came pretty quick, and then left a little bit on the table there if we're talking about maximum potential in that trade. So a very busy day today from Holley, risking $100 a trade and moderate profit, up approximately 200 or 193. But keep in mind that does not account for slippage and or commission if you're still in a commission environment. Okay, I think we do have a question on the AI coming in here. And yes, Sam, you do need a premium subscription for to access the AI. Yes, that is correct. Now we've got a multitude of videos on our YouTube channel, some of which are AI oriented. But that's typically why we take the time at the top of each of the 5 p.m. Eastern webinars to kind of go over the AI trades. Even though there are a lot of trades on here today, you know, a lot of stretched out charts, a lot of back and forth. So a lot of the hot points that we like to focus on, like these 3 topics, there's just not a lot out there today's session. Okay, moving right along here. So everybody knows that typically attends, if you're a regular attendee, you know that I really like the opening range break scan on the intraday because it's so simple, right? Well, a lot of the times we'll see things coming through that just take these big runs off the open, then they'll set up later for a nice consolidation break to the upside or the downside. But many times I've looked back and I've thought, well, it sure would be nice to try to capture some of that initial move, but the charts just look, well, for lack of a better description, too dangerous, too scary to just jump in on the open. But I've recently been paying a lot of attention to the pre-market range over the past couple of weeks, and I've noticed some very interesting correlations, okay? So that's what we're gonna be talking about today, not only opening range breaks, but opening range breaks in the pre-market and playing those ranges in the regular session, okay? It's gonna help take the scary out of jumping into a trade on the open. And everybody always hears, whether you're a seasoned trader or a new trader, well, yeah, you can make some good money on the open. You can also get steamrolled on the open if you're not careful. And that still is the case today. So what we're going to be doing today is looking at pre-market range breaks and using those to minimize our risk and hopefully get some decent moves here. And Sam, I see your other question there. Can you connect the the AI to E-Trade or Trader Pro? Well, since the AI is part of Brokerage Plus, and we do connect Brokerage Plus to E-Trade, then yes, you can connect the AI to E-Trade via Brokerage Plus. Okay, so now let's talk about some of these opening range breaks today. And by the way, let's just start with, I'm going to remove pre-market just for a second, just to give you guys an example here. This is one that worked really well today, which was also called out in the trading room by Mr. Barry. So here we have today's action, right? We're looking at 5-minute candles. Here's the opening candle for Fitch today, right here. Now, you look at this and you're like, yeah, it was a nice swoop down, but a little scary just jumping in there and taking a stab at it, right? Of course, we could look at these little areas from the prior day and use that as our stop, but watch what happens when I show the pre-market. Okay, all of a sudden, this trade becomes a lot less scary, okay? Because look at what we had going in the pre-market, okay? Some stocks will trade pre-market, some will not. Some will look really crazy. This does not look crazy. This just looks very flat, okay? And typically that's what I'm looking for on an opening range break. The more narrow the range leading up to the break, the lower the risk you can take when that break occurs either to the upside or the downside. And here we have the same thing, but making a trade off of the open. So if I look at this candle here, we can see up in the left-hand corner there, kind of hard to make out, 39.50. So I'll just put a line there. Okay, right about, well, we'll just mark it at 47. Easy enough. So we opened right here, right close and tight to that range break, and then shortly after, boom, as soon as we get that break to the downside, well, you can see what happens here. And typically in the normal session, ignoring the first 15 minutes, which is what I've done for years and years and years, I wouldn't see it setting up till maybe this little area right here, which this is not even really the prettiest range. It's a little loose. All right, I like to see them a little bit more tighter, but nonetheless, it worked. But we're down here at 36.10, whereas using this pre-market range here, we could have easily been in 39-ish, 39.30, 39.20, using a very tight stop, okay, based on the pre-market range. All right, if it doesn't work, you know where you're getting out, but look at how well this one paid. And not only did it paid pretty much all day. And I could mark off some additional, add-ons here because this one was just so uniform. Clearly a big seller in there today. How was the volume in it? Well, finished at 4.31 on the relative scale. Lots of volume in it all day. And of course, did I get all of this? Nope. I got out too early on both lots, covered half. Thought I was doing really well covering down here on the second part, and then it even had more to give. So a really nice setup, not using the intraday session, but using the pre-market range. So the key here is to start looking. Obviously, you have to start looking at these things before the open, whether that be an hour or 30 minutes, just looking for the nice flat opening range breaks. So that was a really good example today of Fitch. Here's another one, TDOC, and this one's set up identically not too long ago as well. Let me see here if I can find that. So you'll find that stocks typically have, well, for lack of a better description, personalities. So when we look back here at the 18th, you see that pre-market range in TDOC, a break and a release. Same thing here. And then it sets up again today. This is probably the cleanest one of the prior 3 days. Look how flat that pre-market range is. When we open very close to the top there, and boom, it releases. Once again, very similar to what we saw in the Fitch. It did set up nicely after this initial plunge, which still would have been a good opening range break. But now we can try to get in there and participate in some of these big runners, and these go both to the upside and the downside by using pre-market range as our safety net in case we're wrong. Same game, just pre-market as opposed to regular session. So a really good one in TDOC as well. These were just all over the place today. Another decent one in META. Nice tight pre-range. As soon as it breaks, boom, off to the races. But of course, setting up for a nice add-on opportunity in the regular session, as we can see right here. So this just allows you the game is still the same in the regular session. Still a beautiful opening range break setup from 1688. This thing capitulated down to 16 and change. But being able to capture some of this initial move without worrying too much about getting steamrolled. Of course, a loss is a loss. If it would have came up here and set a new high above that pre-market, that would have been the stop out level right there. But just another great example of a nice tight pre-market range and a nice release right into the open there. Okay, what else did we have here? TDOC, Meta, Snap. Oh, and by the way, the volume was huge in all of these things. I think Snap was probably the lowest, coming in at 1.39 on the relative volume by the end of the day. But notice the nice tight range in Snap here. Really, really tight. As soon as we get that crack, boom, off to the races. Once again, we do get a nice little reprieve and a bounce and a setup for a regular session opening range break, to which you could have added on. So instead of hitting these for the first time in the regular session, missing out on a lot of the opening swish, this is a good technique to really be able to get some of these plays with minimal risk, as you can see here in Snap as well. Yeah, Brian, we'll get to that towards the end of the session, because the same thing holds true, right? In the regular session, when we're looking for opening range breaks, well, I'm just using basically a momentum high-low ticker. These two tickers right here, or these two alert windows, my turbo breaks up relative volume, turbo breaks down. So, what we're looking for there, get back to Snap here. In the regular session, as this Snap is breaking down, it has to be hitting a new low, all right, to be breaking that opening range. So, there's a lot of sifting that has to be done, because just because a stock is hitting a low doesn't mean that the pattern or the timing is conducive or accurate, or I guess in sync, right? You got to have the timing and the pattern play out properly as well. So you have to sort through quite a few symbols looking for the right timing. The same thing holds true with pre-market. Is there a window that I can just throw out to you that's going to show you perfect consolidations in the pre-market? No, you're going to have to sift through, the ones that are being actively traded. But having said that, okay, check out this window down here, pre-market movers. This is part of our pre-market channel. And I'm just going to click on Meta real quick here, okay? See how it, it stops right at the open. This META was the last tick of the pre-market, or right as the pre-market transitioned into the first second of the open, right? And look how beautiful the call was on Meta right there. But they're not all going to be like that. So, the way you would want to go about finding these things is, depending on when you want to start, how early you want to get up. If you start an hour before the open and just go through the pre-market movers, you're going to be able to see the ones that are consolidating, okay, in a nice tight pattern like this Meta, all right? And then that's going to be a stock that you're going to add to your watch list, okay? So, pre-market is just about accumulating the watch list for the ones that are doing this thing right here, all right, like Meta, like Fitch, like TDOC, Snap. And yes, Jennifer, those were short plays, the Fitch, the TDOC. Just to kind of recap here, FTCH, down. Now, having said that, sometimes they're going to go the other way, all right? It just depends on which way they go. If they break the range, and then it's off to the races, okay? And of course, they're not all going to work. Sometimes you're going to, sometimes you're going to get reversed and stopped out, but that's just part of the game in any setup, right? Well, dyslexia much? Okay. TDOC, once again, same pattern. Just reiterating that these are all shorts. We'll take a look at some of the long ones too as well. But before the session is out, what I'm going to do is I'll drop all of these windows into the chat panel. One to look at for pre-market stuff, and then these guys for the live session, because every once in a while you're going to find one coming through here that is just past the break of the pre-market range to the up and the downside, okay? But by building a list pre-market, you're going to have a lot of candidates just to, you know, keep a close eye on. And as soon as the market opens and you see that low or that high get hit, you know, you're not going to be so inundated with ticker symbols, because even if I put these windows on do not repeat forever, for example, if I right click and I go to properties and I say do not repeat, and I say don't repeat ever, so just one symbol comes through, even if I use don't repeat like that, this thing is still moving way too fast and it's just spitting out symbols left and right. So that's not to mean you can't catch one, okay? But it's hard when all those symbols are coming at you. So that's why you can build a symbol list based on what you're seeing in the pre-market, not really wanting to take a trade, but just going, okay, you know, if you saw this about halfway through the pre-market session, you're like, okay, Meta is definitely going to be on my watch list today. Now, it could have broke up, but today it broke down and it paid well, right? So that's kind of the name of the game. You never really know which way they might go. You can try to size that up by looking at the daily chart. But, you know, if we omitted this big red candle here, then we just had, you know, maybe some, you know, we'd hypothesize a little sideways action and a break to the upside. Well, nope. Meta had different plans today. Meta broke to the downside and gave up, you know, talk about engulfing candles, 1, 2, 3, 4, 5 days engulfed right there. So big move. And we let the trade come to us when we see this area and we let it break whichever way it's going to break. So I hope that kind of clarifies it for you. Okay, got a little off topic there. One more short to take a look at here. And guys, I've got a list a mile long. You know, these are just some of the ones I have the time to showcase here. But once again, scanning pre-market for these nice tight ranges, AUPH breaks it right there, and another beautiful just downside painless trade that doesn't require a whole lot of risk. You know, if I mark off the top of that range, which would be our risk area on AUPH, mark off the low there, that's a really nice risk to reward ratio there. And just about all of these that we've looked at thus far. I think, yeah, AFRM was another decent one. I think we talked about that one. Okay, another one. Same pattern, same type of action. All right, so we've taken a look at quite a few on the short side. How about the long side now? All right, great example. Great example on many fronts as well, because this was the first candle of the regular session. Just happened to coincide, you know, with that pre-market activity that you can see there. Not a whole lot of volume, but a break nonetheless of that area right there, okay? But this one's set up for a regular session, good old-fashioned opening range break, all right? So if you would have played this one to the upside, this is more like the second mouse gets the cheese there, you know? If we played it on this break right here, actually, that one's so tiny, but that is technically a high right there. So this one could have very easily been a stop out, even though it looks perfect, right? If you're basing it off the pre-market action right there. But boy, the volume sure came in at the right time here, right about $1.20. And you can see what the stock did for the rest of the day. So just keep in mind, probably want a little bit more liquidity when we're talking about playing that pre-market range there. But I wanted to include this one anyway because of the regular session opening range break that presented itself in perfect timing with the volume coming in there. All right. This one's set up again Later in the day, nice tight range, another break at $1.39, $1.40. This little guy capitulated all the way up to almost $1.80, coming in at $1.74. And yes, Sam, I see your question there. We do have opening range break alerts, not filters. But the problem is this, and I'll just quickly kind of go through there. On the opening range breaks, we do have them, but they're in specific times, right? Now, I'm not really a cat that would want to play 1 minute opening range breaks, 2 minute, 5 minute. I like to see that range develop, make sense of it. So, more inclined to the 15, the 30, and the 60 when using these alerts. Problem is, once you get past 60 minutes, you're kind of on your own, right? Which is why I default to highs and lows on the alert windows. A classic example of that today would be, what was that stock today? Oh yeah. Okay, LGVN, a great example, because really great signal from the pre-market range, right? Opened a little bit lower than the pre-market, this mauve area right here, and then broke it. Would have been a nice entry around 964. Getting in early on the pre-market range break. A lot of volume going through there, nice little flat line action. And then check out what we have, that break at 977, and then it hems and haws all day long. And then right here, 12:15 Central Standard Time, 1:15 Eastern Time, with only about 2 hours and 45 minutes left in the market, we get the biggest move of the day, okay? So, those timed alerts for opening range breaks would have been firing at different times. Once you get past 60 minutes, you get the new high out here, boom, you just identify it. You're like, hey, it's cracking that level right there for the biggest move of the day, 1264, closing way up here, 28-ish on the regular session, and already trading at 3560 in the post market. So definitely something going on with LGVN in the post market. But look how long it took to get there. Look how long, it consolidated there for a nice, easy, identifiable opening range break there. So once again, Sam, there are alerts, but there is no magic alert window or top list that's going to spit out perfect patterns like this. Not to say that they won't sometimes, kind of like the made it to the short side, but most of the time you're going to have to monitor these things similar to what I've been describing. For the pre-market range breaks, you're going to have to watch the pre-market movers and just find the ones manually that are doing this just by looking at all the things that come through there. In the regular session, you just want to wait for the chart to indicate, okay? And if you're monitoring highs and lows, if you're monitoring highs all day, a lot of the times they'll just be these stretched out patterns. We're looking for the smooth ones and the proper break time there. It's all about the timing. So I hope that makes sense, Sam. Okay, RAAS, another really good opening, or excuse me, pre-market range here on a pretty low dollar stock. Notice the candle right here in the regular session. We opened, hemmed and hawed around a little bit. This is
Hey,
also
Jamie,
going to,
my questions panel is all messed up and I didn't see a lot of these questions. So I'll start trying to hit them.
that's okay. That happens because the received column gets out of whack. And if you hit sort by the received column, you should see them sync back up again. But no worries. Let me know if I need to backtrack on anything. Okay, so we got a dual one here in RAAS. As soon as the pre-market range is broke, it's also coinciding with this tiny little U pattern and that big wick on the opening candle there. So that was kind of like a double hitter. Regular session opening range break, perfectly coinciding with the pre-market range. And this one moved pretty good, 353. I kind of was kicking myself today because I did manage to tag this one perfectly. Didn't like what it was throwing me wiggles here. I got out half here, then I got out half just shy of 4, only to see it go up to 4 and change, but oh well. No use crying over spilt milk on that one. Still made some decent cash on it. But once again, just keying off that opening range break there. And of course, some of them are not going to behave so nicely. Foot Locker was in this one too. And we can see not the prettiest opening range break, but you know, retail's been hot to the upside and the downside here lately. When I saw this break right here, I was like, you know what, I'll go ahead and take a stab at Foot Locker. Was in the money for a while, but the longer these things sit and the longer they're not doing anything, you know, that either means they're building up steam to go break out again. But as soon as we cracked below that line there, I was like, you know what, not going to sit around on this one. So this is one that didn't work out so well, but those are going to happen. Okay, and next on the list, I had AMPG. And this one, I just wanted to give an example of one that didn't work out so well. AMPG suckered me in up here, didn't work. Well, come on, mouse. But no harm, no foul. Not every trade's going to work. So the risk was clearly defined there, right? Acted like it was going to go, took a pop at it, said, nope, not going to have any of it. All in all today, I was only, because of the rate at which these alerts are coming through, was in about 5 of these trades, only one short, which was the Fitch, and ended up having 3 winners and 2 losers, and had a nice spread of about $1.20 between my average winner and loser. So what I'll be working on throughout the rest of the Thanksgiving holiday is to try to slim down the number of alerts, okay? Now, building a pre-market watch list, I think, is the sanest way to go about this. You are going to stumble across some during the regular session. Once the session opens, they're going to be close to those range breaks on the pre-market. Those are always good too. But I do believe the best way to go about this when we're playing the pre-market range breaks is to build a list by spending at least 30, 45 minutes or an hour in the pre-market, sizing up the ones that look like what we see here, okay? All right, any questions about anything that I've discussed thus far? Just taking a look at the time here. We are butting up to the top of the hour here. And before I forget, let me just go ahead and drop these windows into the chat panel there. So you're gonna have the pre-market window, which once again is right out of our pre-market channel. Feel free to play around with that one as well. And just keep in mind, the turbo brakes up and turbo brakes down relative volume are geared more, you know, they're not going to report pre-market, they'll fire up right at the open, but there's going to be a lot of symbols coming through there. All right, if there are no questions, I want to thank everybody for tuning in. I hope everybody is geared up for a nice holiday week. And Scott's probably going to walk us out here shortly, let everybody know how they can save a little bit of money on a new sub if you're brand new, or if you'd like to upgrade to premium, the same thing applies. So Scott, if you're ready, we're ready for you.
Yeah, thanks, Jamie. Just a couple things on the way out. If you don't have the strategy indicators ebook, go ahead and grab that. It's very helpful and authored by our director of software development, Dave Mabe, who also brought us Holley and the AIs and the odds maker, some of the other tools that are found in our software. So do check that out. It's got some good ideas, and you can import some of his strategies directly into your layouts by using cloud links from the ebook, tradeIdeas.com/strategy. Also, there's a code, Holley Rocks, saves you 15% off of any upgrade or new subscription. So go ahead and grab that and use it before it expires. And we have a great support depth. You can reach it at info@tradeideas.com. You can also find Jamie on Twitter and harass him at QuantBot, or you can find Steve at TISteveG. Of course, we also have at Trade Ideas and some other handles you can locate. Trade Ideas Pro is the Facebook profile to follow and like and share with your friends. The recording of this session will be up later on tonight or tomorrow, so you can find a recording of that when it is up, and we will email you, since you registered, tomorrow with a link to the playlist where you can find it. Thank you, Jamie. Thank you, Steve. Have a good one, everyone.
Thanks, everybody. Thank you, Steve. Thank you, Scott. Thanks, everybody, for attending, and we'll see you guys tomorrow.